Today I am going to attempt to explain a really fundamental topic if you look after your own accounts, and that is reconciliation. Hi folks, welcome back to the Small Business Toolbox. I'm Andy Mack and I've been running my own business in one shape or form for most of my adult life. First of all, as per usual, massive apologies for the dire lack of content on this channel at the moment. I'm in the middle of quite a big renovation project which you can follow over on my Gosforth Handyman channel if you want to see what's happening. And that is taking over every waking second of my life at the moment, which neatly leads on to this room that we're in at the moment. And I was going to kind of tart the place up a bit, but I thought it's quite a good opportunity to show you some of the sacrifices that you have to make in life to get to where you want to get to. And at the moment I'm in this temporary bedroom with paint and plaster hanging off the wall. There's literally a hole in the wall up there, straight through to our outside with a little bit of insulation shoved in the hole. There's just bare floorboards and scraps of carpet on the floor. On top of that, I need to start taking this room to bits soon because this entire wall's coming out and the roof's coming off and various other things. So I'm on borrowed time in here and I need to move my temporary office into another place, but hopefully it'll all work out, fingers crossed. So in this video I'm going to explain what reconciliation is, why you need to understand it and why you need to do it if you look after your own accounts. If you've got an accountant looking after your accounts for you, then they will probably be doing the reconciliation on your behalf. But if you do all of your own accounts, it's something that you're going to have to understand and do. So we've talked in the past about when you're managing all of your income and all of your receipts, all of your outgoings and stuff like that, keeping a log of everything. So it's part of the obligations of running a small business, whether you're self-employed or a limited company, you've got to keep financial records so that if you can get audited, and the Inland Revenue or HMRC come along and say, what was that £230 that you paid out on the 15th of January? You can go through your records and you can tell them and you can provide them a copy of the receipt if they ask for it. For very small businesses, the easiest way of keeping a record of all that stuff is in a spreadsheet. Spreadsheets are absolutely perfect for that. They're designed for logging that sort of information. They work really well. Once your business gets a little bit bigger, you'll probably want to keep track of things like who's paid your invoices, automatically chasing customers who haven't paid you and all that sort of thing. And you can do a lot of that in an accounting application. So as your business grows and scales, you probably want to be thinking of using some more professional software for managing your accounts. All I would say is if you are using professional accounting software, you need to understand how to properly use it and you need to understand all of the accounting terminology that goes with it. And then finally, once your business has grown to the size that you can afford to pay an accountant or a bookkeeper to manage all of your accounts for you, they're going to look after that and you're hopefully not going to have to think about it too much. But the book still stops at you if you get audited. But just coming back to the very small business example, so if you're just keeping a log of income and expenses in a spreadsheet, you need to make sure that that spreadsheet is exactly correct as per what actually went in and out of your bank account. And it's very easy for those two things to get out of sync. For example, you might have issued an invoice to a customer and you've not noticed that they haven't paid you. So you might have logged it in your income thing that you've received £200 off your customer, but actually they haven't paid you anything. You've never bothered to check your bank account that the £200 went in. Very easily happens when you're dealing with a lot of money going in and out of an account. Likewise, you might have logged a receipt and you might have logged the same receipt twice accidentally, or you might have put the wrong amount in or something like that. So the way that you manage to find these errors is by doing a thing called reconciliation. And reconciliation is simply a process of going through your bank statements line by line and checking off that every single thing that went in and out of your account matches up to your records that you kept in your spreadsheet, for example. If you do use accounting software, there will be a reconciliation function within the accounting software. If you pay an accountant, the accountant will be doing the reconciliation on your behalf. It's an absolutely fundamental thing. You've got to make sure that they are correct to the penny. As I've always been told, if you're a penny out, you might as well be £1,000 out, because it means there's a mistake somewhere. you need to work out where that mistake is and you need to fix it. At the start of the year, you should have an opening balance on your bank account. At the end of the year, you should have a closing balance on your bank account, and you should have a log of every transaction to make those balances match up in your own records. So I'm going to show you how I go about doing that using spreadsheets. You use whatever method you want to use. A lot of people will just literally print off their bank statements and just tick all the transactions. That's absolutely fine. The key thing in all of this is having your opening balance, your closing balance, and making sure that your record of income and outgoings matches up to the difference between your closing balance and your opening balance. So let's have a look at what this looks like in real life. And I've set up a bit of a sample spreadsheet here so we can have a little bit of a play and we'll show you what reconciliation looks like. I'm going to assume you've been good boys and girls and you've logged all of your transactions coming in and out of your account in some sort of way. To keep things really simple for this video, all I've got here is a sheet for income where we've either invoiced customers or some customers have paid by credit card or some have paid by cash. And we've also got a separate sheet here for expenses, for money being paid out for customer materials and general running costs of the business. Again, to keep things simple, I'm assuming you're not going to be VAT registered. If you are VAT registered, it's probably a good idea to add on a few columns to track VAT. But for the purposes of this, we're just looking at the gross amount coming in and out of your bank account. I'm also going to add an extra sheet here just to go through our reconciliation calculations. It's easier to show you on a spreadsheet how that works, but you could end up just doing it pen and paper. It doesn't take long, but it does make life easier if you kind of write things down. And we've also got our example bank statement here that we're going to be reconciling. This one is for June 2022, so it's all transactions that have gone in and out of the bank account from the 1st of June to the 30th of June. I'll just make this a bit bigger so you can actually see what's going on. And the key things we're going to be looking at to start with are the opening balance and the closing balance. So we've got an opening balance of £12,446.52. And we've got a closing balance of £14,344.79. So the first thing I'm going to do is work out the difference between those two numbers. So I'm just going to do equals that minus that. And then we're going to compare that directly to this spreadsheet and see how the number compares. So we'll look at income first. We've got some transactions on here that were reconciled last month. So these May ones were reconciled for the May statement. So they've already been done. So I've already set up a filter on the spreadsheet so that I can filter by date. And I'm only going to show transactions where the money has actually been paid in June. So it's just a question of adding up these figures here. I would suggest you set up some formulas to do this for you, but I can see at the bottom here it's £2,400. We'll pop that on the reconciliation sheet. And likewise for expenses, again you can see we've already got some reconciled from the previous month, so we're only going to look at the June expenses, money that's actually gone out in June. And similar story, we're looking at the total of this column here, which I can see is £784.23. And again, we'll add a quick formula here just to look at the difference between those two figures. And as you can see, the number that's on the bank statement doesn't match up to what we've got on our journal. So I'm going to add another figure down the bottom here just to look at the difference between these. Ultimately, I'll just put this in bold so you can see what we're looking at. And ultimately, we want these two numbers to be the same. If they're not, we have missed something somewhere down the line. So for the purposes of our reconciliation check, we can see we are £282.50 out, and we need to work out where that is because effectively at the moment our accounts are wrong. Now if this figure happens to be zero and you're in a rush, you could technically go through and just mark all of these as reconciled and say, yes, it's correct, because effectively your bank statement is matching up to your journal. And if your accounts are being produced from your journal, then you know everything is more or less correct. But that's not 100% fail-safe, because you could have situations where you do have errors in your accounts. It's just they happen to balance out and give you that reconciliation check of 0, but you could still have errors in the account. So really what you should be doing is going through line by line and checking every single transaction. And I like to do that regardless of whether or not this reconciliation check number is correct. But as you can see, in this situation, it's wrong anyway. So we need to work out what has gone wrong. So what I do is I reconcile all of the incoming transactions first, and then I go through and reconcile the expenses. So we can see for income, we've got a faster payment, so a BACS payment effectively, £1,200 from Big Wheels Limited. That's this one here. It was invoiced on the 4th of May and they paid on the 4th of June. So we're going to mark that as just a yes for reconciled. We've then got £350 cash deposit at the post office on the 5th of June. Now that's an interesting one because we don't have it here. Where is it? £350 is effectively missing. Let's just take this filter off and see if we can find it. And sure enough, here it is here. It's these two jobs, 11th of May and 12th of May, but both of these customers paid by cash and we didn't get round to banking that cash until the 5th of June. So I'm going to mark both of those as reconciled, and because I don't want to risk running into this problem again, I'm going to leave the date filter off for now. And by the way, when you're working through this in real life, it's way easier if you print the statements off and just tick each one as you go. You're always looking at the statement and working through the statement in order. Don't work from the spreadsheet to the statement, always work from the statement to the spreadsheet, if that makes sense. So our next one, £190 for a faster payment from Zettel. So these are credit card transactions, 190 and 142. Let's have a look in the journal and see what that looks like. So interestingly, the customer actually paid £200 and £150. But what's happened here is the credit card fees have been deducted before you've been paid the money. So effectively, it is these two transactions. So I'm going to mark them as reconciled because we know that they have been paid, but this one must have had a card payment fee of £10 and this one must have had a card fee of £7.50. We'll come back to that in a moment because this is going to cause a little bit of a problem. Anyway, back to our statement, and we've then just got two faster payments or BACS payments, one for 500 and one for 300, 24th and 27th of June. There's the one for 500, we'll just mark that with a Y, and there's the one for 300. We'll just put the date filter back on very quickly, and you can see at the moment we have got one transaction here from Harry Harrison for £50, and that isn't showing up on our statement. Apparently they paid us on the 22nd of June. But for whatever reason we haven't been paid. We'll come back to that. In the meantime, let's go through the expenses and check that these are all correct. Back to our statement, we've got £30, £15, 89.23, and here they are here, £30, £50, 89.23. We've then got Screwfix 150, Electric Centre 30, Post Office 20. They're all present and correct. And then we've got Electric Centre 100, MV Insurance 150 and Electric Centre 200. They're all present and correct. So we've got that, that and that. We'll switch off the date filter just to double check that we haven't missed anything else and everything is good, everything is reconciled. One of the things that we mentioned before that we are going to have to fix are these credit card fees. We need to account for these credit card fees somewhere because it reduces your profit and you need to be accounting for that. If you've got a lot of credit card fees and you don't account for that, you're going to end up paying tax that you shouldn't be paying. Again, I'll just switch the date filter off here, but we know we've got card fees on the 17th of June for a total of £17.50. So I'm just going to add that. What was it? 17th of June. We'll add that as an expense into the expense journal here. 17,622. We're going to say it's to Zettel and it is card fees, and for the category I'm just going to call that bank charges. £17.50, and we'll mark that as reconciled because that already has been catered for on the statement. Now you can see here we don't have a gap in our receipt IDs, so I'm just going to call it 333B. It doesn't really matter because we haven't got a paper receipt for it anyway, and these numbers are mainly to make it easy to look up your paper receipts. If you've got them all in a file, then you can have them all numbered, and then if you want to search for one, search for it on your spreadsheet, work out what number it is, and then you can go and find it straight away in your file. We'll just quickly put the date filter back on and double check our total outgoings, and the total outgoings are now 801.73, so I'm going to update that on here. 801.73. Obviously in real life you would set up formulas to do this automatically, but I really want to show you the manual way of doing it, because a lot of people just do this by pen and paper, and if you understand how to do it on pen and paper, you will understand how to do it on a computer. So you can see we are currently £300 out. Why are we £300 out? We turn the date filter off, we have reconciled everything on expenses, and we know everything is correct. And if we go to our income log, you can see there's a few things that aren't reconciled. So what's gone wrong here? So if you remember, there was £350 that we've got marked as being paid on the 11th of May, which is technically correct. That is when the customer paid us, but it wasn't banked until the 5th of June. So we need to add that figure onto our total so that the reconciliation all works out. So in other words, this number here should be, we'll just add a tiny little formula, that plus 350. So it should be 2,750. And now our reconciliation check is out by £50. We're getting closer. So let's have a look and see what's gone wrong there. Why are we £50 out? And in this situation, if you're really scratching your head, just do a search through your accounts for that amount, and 9 out of 10 times you'll find it just by doing a search. But I can see straight away at a glance, look, we've got a transaction here for £50 paid in June, but it's not reconciled. Why is it not reconciled? Well, the reason it's not reconciled is because they paid by PayPal, and we haven't taken the money out of PayPal. So technically, that needs to be deducted off our balance, because for the purposes of our bank account, that hasn't happened yet. That hasn't hit our bank account. Now, for the purposes of accounting, that has happened. PayPal can generally be viewed as a separate bank account, and as such it should really be reconciled separately. But for the moment, what we're going to do here is we are going to deduct £50 off this figure here, because it hasn't hit the bank account yet, and you can see our reconciliation check is now at 0. And what we will do is we'll mark that as reconciled once we get the money off PayPal, and then we'll also have to account for PayPal fees and stuff like that as well. Make sure you don't forget to account for your bank charges. It's very easily done, and it can be quite a significant amount of money. If you've got a lot of people paying by credit card, PayPal, or anything else like that, it really can affect things. So what we like to do is then just rename the PDF file and add a little R after the file name, just so that we know that that has been reconciled. Another thing that you can do as well is, instead of just putting a yes in the reconciled column, is to put the date that you reconciled it. So for example, these May ones were reconciled, let's say they were done on the 1st of June. And then all of these other ones we've just done, we'll say they were done on the 1st of July. And then it just makes it a bit easier to see when you last did a reconciliation, because you might not do this monthly, you might do it quarterly or every 6 months. We tend to do it quarterly to match up to our VAT return, so that we know at the point that we're doing a VAT return that everything is reconciled. I'm going to add a little note in here to remind us that I need to do a drawdown from PayPal, because if you don't accept PayPal payments very often, then it can be easy to accidentally forget to take it out of PayPal and it never actually hits your main bank account. And obviously what this has also highlighted is that we've got a customer here who was invoiced on the 25th of May, who still hasn't paid us, and at the moment we've got the date paid marked as the 1st of July. Perhaps they have already paid, but you could have a situation where they've told you that they paid you on the 15th of June, and therefore on trust you put the date paid as the 15th of June, but you've gone through and done your reconciliation and you can see it hasn't been reconciled, it hasn't hit your bank account. They owe you money and you need to make sure you get that money off them. It's such an important thing to do. Probably 9 out of 10 times when we run into a problem with reconciliation, it's because someone either hasn't paid us or they've paid us the wrong amount. And I know what you're thinking. In the age of electronic banking and making tax digital and all of that shenanigans, why don't you just categorize all of your transactions within your banking software and just be done with it at that? Well, you absolutely can, but it's very easy to lose track in your banking of what certain things are for. For example, this cash deposit on the 5th of June for £350, how do you know what that's for? What customers have paid as part of that £350 deposit? Also, things like credit card payments. Technically, if you just go by your bank balance, it looks like you've had a turnover of £190 and £142.50 on the 19th of June, but that's technically incorrect. Your turnover was actually £200 and £150, and then you've had expenses that are your bank fees for those transactions. So you could very easily end up in a situation where your turnover figures are wrong, your expense figures are wrong, and this is really where things like spreadsheets come into their own to properly categorize and track all of your transactions. I still haven't found a piece of accounting software that works as well as spreadsheets. Certainly for the way we work, spreadsheets are just the easiest way of doing this. Obviously, the other option as well is to have accounting software directly linked to your bank account, and that can help, but sometimes that can get quite complicated as well. I generally find spreadsheets are just the easiest thing in the world. They work. It means that you can customize it to do anything that you want it to do. I've said it before and I'll say it again. Spreadsheets are the electronic equivalent of a Simplex D book, and if you don't know what a Simplex D book is, Google it and find out, but that was the way accounts were done 20 or 30 years ago, and it worked then and it still works now. The dangers of using accounting software is that if you don't understand all of the terminology within the accounting software, you can end up entering things wrong, and ultimately that could result in you paying either too much or too little tax. I hope that all makes sense. If you've got any questions, pop them in the comments below and I'll do my best to answer them if I get time. Don't forget, there's extra stuff over on the Small Business Toolbox website. You can subscribe and become a member if you found that the content that I produce helps you and you want to try and support the channel. Then it would be awesome to have you on board as a member. As a bit of a thank you, there's a few extra things that you can download, spreadsheet templates and whatnot. Link in the description below. For now, I wish you every success on your small business journey. Take care, folks. I shall see you next time. Tatty bye.